The market advertises strength every day, but only a few moments are sponsored. And Jesse Livermore taught me to buy sponsorship, not noise. When I first started hunting for strength, I chased whatever glowed. Fast candles, headlines that sounded like victory parades, chat rooms buzzing with certainty. It took me years, and more tuition than I cared to admit, to learn that true strength doesn't shout, it behaves. Livermore called it the line of least resistance, the path price wants to travel when bigger hands are quietly aligned. This film is the blueprint I wish I had on my desk the first time a stock looked unstoppable and then stopped on me. I'm going to show you how I used Livermore's method to spot the kind of strength that appears before the crowd recognizes it, the kind that holds through tests, funds ads, and lets you sit tight without burning your lungs. Here's the difference I now look for. Apparent strength is a sprint that leaves no footprints, fast spikes, thin bids, sympathetic moves driven by a cousin stock or an index pop. True strength leaves behavioral evidence, reclaiming and holding levels that mattered, pulling back and finding sponsorship exactly where it should, pushing with participation across leader names, and refusing to give back progress when the tape tests it. Livermore didn't have our indicators, but he had an instrument we sometimes forget to use, sequence. He wouldn't promote a single tick to proof. He asked the tape to perform a chain of actions that a crowd faking conviction can't fake for long. Before I ever send a probe, I frame the ocean. Is the tape forgiving, neutral, or ruthless? If it's forgiving, I allow more attempts because sponsorship tends to appear where it should. If it's ruthless, I raise the confirmation bar and cut my frequency because even good ideas die on contact. That label controls my ambition, attempt count, default risk, and how high the confirmation bar sits. It's Livermore's way of keeping me from letting one shiny chart overrule an ugly sea. If the ocean won't sponsor strength today, I don't let my fear of missing out pretend that it will. Then I map the 3 theaters where true strength must perform. First, levels. Price must reclaim and hold a line that mattered. Yesterday's high, the pivot that capped last week, the base top that failed on first breakout. The point isn't the line, it's the hold. Second, location. The first pullback after reclaim must find sponsorship where it should, just above the reclaimed level or at a well-defined higher low, not at random distances that scream luck. Third, leadership. The move must be confirmed by character, not just ticker. If my focus name lifts but peer leaders yawn, I'm watching a solo act. Livermore wanted chorus, groups that move as a campaign, not a cameo. When those 3 theaters light up in order, I send a scout. Small, bracketed, purpose-built to ask a yes-no question. Will this strength behave? If yes, I add from profits on fresh proof. Range shift, clean, retest and go, or confirmation across the group. If no, the scout dies at disproof or time. That's the other part of true strength. It should declare itself on time. A momentum idea that can't reveal character within a pre-declared window isn't resting, it's stale. Livermore's time stop protects focus, not just dollars, so I can be present for the next sponsor that actually shows up. This is the terrain we'll walk through in this series. How to tag the ocean so you stop forcing strength to exist. How to read the telltale sequence that precedes larger moves. How to separate a sympathy pop from a sponsored advance. How to pyramid without bravado because the market, not you, is funding size. And how to hold when the crowd finally sees what you saw earlier. By the time we're done, you'll have a portable checklist for pre-crowd strength that survives regimes, headlines, and your own adrenaline. When a name looks strong on your screen, which signal do you trust most right now? Reclaim and hold? Sponsored pullback? Or leadership confirmation? Tell me below and I'll focus hard on your pick in the next section. Picking up from that idea of true strength behaves, I always meet the same tension the instant a chart starts to look alive. A part of me wants to jump in before the evidence completes, and another part wants to wait so long for perfection that the invitation expires. The paradox is simple to describe and brutal to live. If I act too early, I end up purchasing apparent strength, a sprint with no footprints, and I teach my nervous system that impatience gets funded. If I wait for every box to be checked 3 times, I arrive with the crowd, pay the highest price for the least advantage, and call it prudence. Jesse Livermore solved this not with a feeling, but with an order of operations that gives both impulses honest work and denies each the right to improvise. The first move I make is the same one he made. I tag the ocean before I judge the ship. I ask whether today's tape is forgiving, neutral, or ruthless. If it's forgiving, I allow more attempts because sponsorship tends to appear where it should. If it's ruthless, I raise the confirmation bar and cut my frequency, because even good ideas die on contact. That label keeps my FOMO from letting one gorgeous candle overrule an ugly sea. It also keeps my caution from turning into paralysis, because even in ruthless conditions, a scout can ask a small, honest question. The paradox gets louder at the first flicker of momentum. My be early self points to the reclaim tick and whispers, "This is it." My be certain self counters with, "Not yet." Livermore's way through is to define confirmation as a sequence, not a snapshot. The tape must reclaim and hold a meaningful line, pull back and find sponsorship at the right location, and push with participation across leaders. That 3-link chain gives my early self permission to act without guessing, send a small, bracketed scout on the reclaim, and gives my careful self permission to wait for the second and third links before size appears. Both voices get a job. Neither gets the wheel. Time is where I used to lose the plot. In the pursuit of spotting it before the crowd, I let setups idle until they became hostage trades. No violation, no progress, just a tax on my attention. Livermore paired every price stop with a time stop. If a momentum idea owes me character in the first N bars and doesn't pay, the idea is stale. That rule turns waiting into procedure. It also prevents the rationalization I'm best at, calling random pauses coils so I can keep believing. Size is the next battleground. When the first pulse goes my way, the early voice wants to press from belief. The cautious voice wants to keep nibbling forever. Livermore's answer is ads from profits. If the second link appears, Unit 2 is funded by the scout's unrealized gain. Progress literally pays for the aggression. If the third link appears, Unit 3 unlocks under the same rule. This alchemy turns boldness into policy and makes averaging down logically impossible. If conviction must trail proof, adding into disproof is contradiction, not courage. Correlation contributes a quiet sabotage. When the group heats up, 4 tickers start to rhyme, and my diversified confidence is really one bet in a trench coat. I count exposure by character, theme, or factor, and cap total open risk there, so the paradox can't hide behind activity. If the index shoves or factor coupling tightens, I trim the basket as one decision, even if my lead name still looks pretty. I'm respecting the ocean I just labeled, not worshiping the ship I prefer. By chaining behavior in this order, conditions, scout on reclaim, sponsorship at location, participation across leaders, paid ads, price and time exits, factor caps, I don't have to choose between being early and being certain. I become on time. Early enough to matter, late enough to be sponsored. That posture is the bridge from Section 1's definition of true strength to the next reality I have to name, the psychological traps that make me edit the sequence when the screen starts flattering me. In this tension between acting early and waiting for sponsorship, where do you slip most? Entering on the reclaim before the hold? Refusing the time stop, or pressing size before the ad is paid? Tell me below, and I'll target that exact leak in the next section. Carrying that order of operations from Section 2 into real time, I can see exactly where the structure starts to fray. In the quiet edits I make to my own language when a chart flatters me. I don't usually break rules with a crash. I file them down until they no longer protect me. Reclaim and hold becomes reclaim is probably enough. Sponsored pullback becomes buyers will show. Ad from profits becomes ad so it matters. None of those changes alter the tape, they alter me, and the market doesn't have to punish me right away to prove that it noticed. The first trap is manufactured confirmation. True strength demands a chain, reclaim and hold, to pullback and sponsorship, to push with participation. But when I want in, my brain promotes a single tick to proof. I start narrating a pause as absorption, a candle as sponsorship, a chat room cheer as participation. Livermore's cure is to make the verbs non-negotiable. If a reclaimed level doesn't hold, there is no proof. If the first pullback doesn't find sponsorship near where it should, there is no proof. If leaders don't participate, there is no proof. The chain is either intact or it isn't. Anything in between is me trying to buy certainty on credit. The second trap is time distortion. In the pursuit of seeing it before the crowd, I'm tempted to grant the setup more minutes than the method allows. Hostage trades don't always violate price, they violate tempo. The idea promised to reveal character within a window and didn't. Livermore paired every price stop with a time stop to protect cognition, not just capital. If I don't honor that clock, I don't just risk a dollar amount. I mortgage the attention I need for the next real sponsor. Third is anchoring and identity rescue. After the first pulse in my favor, I anchor to a high-water unrealized and treat any give-back as betrayal. After 2 quick, clean scratches, I want to get back in size to restore tone. That's not trading the tape, that's repairing self-image. Livermore disarmed this by making ads conditional unpaid progress. Unit number 2 exists only if the scout's unrealized funds it, and only on fresh proof. When paid ads are the only ads, averaging down becomes logically impossible because disproof shuts the door. Fourth is narrative stops, moving a stop to where pain is lower rather than where the idea dies. The thesis dies at lost structure, last high or low broken, failed reclaims, new support refusing its job, or time expiry. Anywhere else is anesthesia. Each narrative inch invites the crowd's emotion into my decision and steals the neutrality I need to sit tight later. Fifth is correlation blindness. In a strong group, it's easy to hold 4 tickers that rhyme and call it diversification. When the factor wave turns, all 4 kneel at once. Livermore diversified by character, leaders versus laggards, momentum versus mean reversion. Livermore's perspective on the situation. Flowing directly from the traps I named in Section 3, the most useful thing I ever borrowed from Jesse Livermore was the way he defined strength without modern tools. He didn't need oscillators to tell him what sponsorship looked like. He watched how price behaved around points of importance and whether big hands kept their promises after touching those points. He treated the crowd as a weather system and himself as a sailor. He couldn't order the wind, but he could read it and trim the sails before the shoreline noticed. He began with the ocean before the ship. When the market as a whole was forgiving, leaders marching, breakouts getting support, reactions shallow, he allowed himself more attempts to test ideas. When the ocean was ruthless, failed breakouts, sponsorship absent, violent reversals, he didn't ask a single beautiful chart to overrule that sea. He cut frequency and raised the threshold for proof. That posture is how he dodged the first trap we discussed, baptizing noise as evidence just because he wanted a story to begin. Then came his definition of confirmation. For him, True strength was not one bar that looked powerful, it was a sequence performed at meaningful locations. First, reclaim and hold. He wanted to see price retake a prior point of resistance or a pivotal line, and then behave as if that line now belonged to buyers. Second, the first pullback must find sponsorship where it should. Not miles away, not on random luck, but close enough to the reclaimed level that the logic of the move stayed intact. Third, he wanted to see a push with participation, not a solo act. He looked for leadership to echo the move because true campaigns rarely advance on one name's courage, they advance on a group's appetite. He always tested with a probe, what we now call a scout. That first entry was small by design, a paid observation rather than a declaration of identity. If strength was authentic, the tape would fund his conviction. He would add from profits on fresh proof, range shift, clean retest and go, or leadership confirmation. This alone demolished the logic of averaging down. If conviction must trail proof, adding against disproof is contradiction. His pyramids rose only when the market paid for new floors. Stops were contracts with reality, not negotiations with comfort. The price stop lived exactly where the idea died, under the reclaimed level that should act as support, beneath the most recent higher low that tells the story of structure, or below the pivot the thesis depends on. The time stop lived where the thesis expires. A momentum idea owes character on time. If it doesn't appear, the trade isn't patient, it's stale. Livermore protected cognition as fiercely as capital because he knew the next sponsored move requires a clear operator. On correlation, he was decades early. He understood that 5 tickers in the same theme could be one bet wearing different jackets. So he diversified by character, leaders versus laggards, momentum versus mean reversion, cyclical versus defensive, so that one macro shove couldn't sink an entire day. Counting exposure by ticker is theater. Counting by theme is seamanship. When the overall market shoved, he reduced exposure as a basket, even if his favorite chart still looked fine. Because waves, not raindrops, capsize boats. Finally, he kept cash as inventory. Flat wasn't failure. It was optionality and attention, 2 currencies that buy the next early seat when true strength finally declares itself. The crowd often reads that stillness as timidity. Livermore treated it as discipline, the dignity to do nothing until the tape hires him. When I overlay his lens on the order I built in Section 2 and the traps I named in Section 3, I get a complete posture. Conditions gate ambition, sequences hire conviction, profits fund size, price and time end arguments, factor caps prevent hidden leverage, and cash preserves the operator. That's how he spotted true strength before the crowd, not by guessing the future, but by demanding behaviors the crowd struggles to fake for long. Which part of Livermore's lens would most upgrade your read right now? Treating cash as inventory, demanding the 3-length sequence at meaningful locations, or reducing the whole basket when the market shoves? Tell me below and I'll emphasize it in the live example next.
Carrying Livermore's lens straight into a live session, I chose one name, HarborWorks, because its group had been building quiet higher lows while the index argued with itself. I refused a basket. 5 cousins would only disguise one exposure. Before the bell, I did what Section 2 demanded. I tagged the ocean. Breadth was improving but not exuberant. Realized ATR sat a notch above its 20-day. Leadership steadied after a week of rotation, and factor coupling had loosened just enough to call the day neutral. That single word set my permissions. 4 attempts allowed, standard scout size, and a confirmation bar 1 step higher than usual. With Section 3's traps in mind, I wrote the 3 theaters where true strength must perform: level, location, leadership, and I wrote them on the blotter so my future self couldn't edit them. The level was last Thursday's high, the spot that twice rejected buyers after strong opens. I drew it and added a volatility cushion so a whisper above couldn't impersonate a reclaim. The location was the shelf just above that level. If we pulled back after reclaim, sponsorship had to appear there or at the most recent higher low on the 30-minute. Anything deeper and the story bent. Leadership would be confirmed by 2 peers in the group and the sector ETF. I wanted choir, not a soloist. Then I built the order architecture to match Section 4's posture. First ticket, a bracketed scout with the stop at disproof beneath the reclaim with cushion, and a time stop set to 75 minutes. Long enough for momentum to show character, short enough to prevent a hostage trade. Ads could only unlock if profits paid and fresh proof appeared, range shift, retest and go, or leadership echo. The Open tried to recruit my impatience with a quick pop directly into the level. I did nothing. It rejected and slipped, evidence that last week's sellers still lived there. 10 minutes later, HarborWorks approached again, but this time the tape reclaimed and held, not for seconds, for minutes. Bids stepped up. The sector ETF nudged green. That was my scout. Small, unemotional, asking a yes-no question. Immediately, I forced myself to look at location instead of P&L. We dipped to the shelf just above the reclaimed line. Spreads stayed tight and sellers looked tired. On the next push, the tape brought participation. Volume expanded, one peer marched in lockstep, the other stopped sulking and joined. The group looked like a campaign, not a cameo. Unit number 2 unlocked funded by the scouts unrealized, not by my appetite. Mid-session delivered the test every strong morning owes, silence. This is where Section 3's time distortion tries to rewrite rules. I watched the timer rather than my feelings. At minute 58, we printed a higher low right where the story said it should be, and then a range shift took us above the morning's intraday high. Unit number 3 unlocked on that fresh proof. Into the first measured extension, I scaled a third to bank campaign profit and raised the stop under the intraday structure that now defined the thesis. I wrote a single sentence in the blotter to handcuff future me. If the entire paid move is surrendered, reduce without speeches. Late afternoon, the index exhaled lower and factor coupling tightened. I didn't wait to see if HarborWorks would be the exception. I respected the ocean and trimmed the basket exposure, lead and peers together, because waves, not raindrops, sink boats. HarborWorks dipped, kissed the raised stop, and held. I left a small runner into the close, but only because structure supported the hold and leadership still sang. The next morning gapped just enough to tag the trail. Flat, green, unremarkable. That's how I want professional exits to feel. Procedural, not performative. The journal mattered more than the dollars. Level was reclaimed and held, location honored with sponsorship in the right place, leadership present, ads paid by progress, exits at disproof or time pre-written, basket trimmed when the ocean turned choppy. No averaging down because the logic of proof before conviction made it impossible. No hostage trade because the timer had jurisdiction. What read as spotting strength before the crowd was nothing mystical, just refusing to promote a single tick to truth and forcing the take to perform the sequence a crowd can't fake for long. That day gave me something more valuable than P&L. Permission to sit tight the next time sponsorship appeared, because I had earned the right to trust my rules. From here, the story doesn't stay tidy. It never does. There's always a session when the method hums and the operator slips. Fatigue creeps in. The timer feels rude. The ocean tag gets upgraded in my head because I want action. That's the emotional drop I move into next. In that HarborWorks campaign, which piece would be hardest for you to obey? Waiting for the hold after reclaim? Enforcing the time stop during silence? Or trimming the basket when the index shoved lower? Tell me below and I'll tighten that exact joint in the next section.
Rolling straight out of the HarborWorks campaign, the charts went quiet, but I didn't. That's the danger no candle shows, how a clean sequence and tidy exit can loosen the screws I swore were tight. The morning after, I opened the platform earlier than planned, skimmed the checklist as if familiarity were a substitute for attention, and let yesterday's competence pretend to be today's character. The pre-open dials didn't lie. Breadth had thinned. Realized ATR stayed elevated. Leadership narrowed and factor coupling tightened. The ocean had shifted toward ruthless, but in my head, I upgraded it to neutral because I wanted room to move. That was the first slip. Not a broken rule, a borrowed mood. The first scout I sent was textbook and died politely at disproof. Tuition, nothing more. The second should have been slower, but I pressed it to restore rhythm rather than to ask a question. Another clean scratch. What changed wasn't size, it was meaning. When the third opportunity appeared, I felt my breathing shortened, the way it does when the trade becomes a conversation with identity. I wasn't asking the tape to sponsor me, I was asking it to validate me. The setup itself had promise, on paper, a reclaim attempt in a name adjacent to HarborWorks, same group, similar structure, but the hold never truly materialized. The pullback bled instead of breathing, and the participation I thought I saw was a lone impulse without the choir. The time window marched forward with the indifference only a market can muster. My cursor hovered over the stop, and I felt the sentence I've paid for too many times begin to form. Give it a little room. I didn't slide the stop on the ticket, but I slid it in imagination, a rehearsal for disobedience. That was my alarm. I flattened on schedule. The financial difference was cents. The cognitive save was massive. I left the desk for 10 minutes like I promised I would when I'm tempted to negotiate with rules. Shoes on, water, air. Back at the journal, I wrote 2 columns to translate emotion into audit. What the tape proved, failed follow-through at the reclaim, sponsorship absent at the expected shelf, leadership quiet, factor wave heavy. What I assumed without proof, it's due to hold. That was a shakeout. Leaders don't break so soon. I had traded a memory of yesterday's sponsorship and tried to make today rhyme with it. That was the emotional low point. Not a blow-up, but the moment the method nearly became theater. I recovered the same way I built the edge, by enforcement, not speeches. I toggled the on-screen regime to ruthless, which instantly tightened my permissions, max 3 attempts, half-size default, confirmation bar +2, and I left the tag visible on the chart so my future self would have to argue with something bigger than appetite. I reset the ad logic to accept only paid ads on fresh proof. I locked the time stop automation so no position could apply for hostage status. I raised the basket alert sensitivity so correlation waves would trigger trims even if my favorite chart still looked pretty. And I verified the -2-hour day fuse so redemption couldn't log in. The afternoon offered the real turn. Nothing. 2 candidates flirted with the reclaim and then shrugged. In older versions of me, that silence would have been an insult I needed to answer. Here, it was maintenance. Cash felt like inventory again, not absence. Near the close, a single name finally reclaimed with a proper hold. I sent the scout, clock ticking. The pullback found sponsorship where it should, but the participation never arrived. I exited on time, wrote 1 line, proof did not hire conviction, and closed the platform with both capital and attention intact. What saved the day wasn't cleverness, it was the willingness to let time end arguments and let conditions gate ambition. Livermore's voice, or at least the one I've trained myself to hear, cut through the leftover adrenaline. Don't try to be early or perfect, be on time. True strength will declare itself through the sequence a crowd cannot fake for long, and when it does, the market will fund your size. Until then, protect the operator. When you feel that "give it a little room" sentence forming, which tool rescues you fastest? Time stop automation, a visible regime tag on the screen, or a broker-enforced -2-hour fuse? Tell me below, and I'll hardwire that rescue into the rule we'll formalize next.
Coming straight out of that near miss and the reset it forced, the lesson that actually stabilized me was Livermore's most unfashionable idea, rebuilt as an operating system. Proof before conviction. Not a model for a poster, an order of work that runs even when I'm tired, flattered, or under pressure to make something happen. If sections 1 through 6 taught me to distinguish true strength from apparent strength, this section bolts the distinction into rules so my future self can't talk his way around them. I start with a commitment I can measure. The market must hire me before I work overtime for it. Hiring, in this context, is a sequence I now treat as a contract. First, reclaim and hold at a point of importance. Yesterday's high, the pivot that capped last week, a base edge that has meaning beyond a single bar. Hold is the key word. A whisper through the line is just a test. Second, the first pullback must find sponsorship where it should, on or just above the reclaimed level, or at the last higher low that defines structure. If sponsorship appears too deep or too random, I'm looking at luck, not strength. Third, the next push must carry participation, not only volume on my name, but leadership confirmation across the group or theme. One star can be lighting, a chorus is a campaign. Until that chain appears in order, I'm an observer with cash, not a protagonist with opinions. That chain triggers a choreography I can't fake. A scout goes on the hold, tiny, bracketed, and on a timer that matches the setup's tempo. Its job is information, not income. Unit number 2 unlocks only if two things are simultaneously true. A, the scout's unrealized pays for the additional risk, and B, fresh proof appears, range shift or a clean retest and go with sponsorship. Unit number 3 requires an independent proof, leadership broadening, relative strength spreading, or a second range shift. Paid ads turn aggression into policy and make averaging down logically impossible. If conviction must follow proof, pressing into disproof is contradiction, not courage. Exits live where stories end, not where discomfort eases. The price stop sits exactly at disproof, below the reclaimed level that must act as support, beneath the last higher low that defines the thesis, or under the pivot the campaign depends on. The time stop closes the oxygen valve on hostage trades. Momentum owes me behavior inside a declared window. If it withholds, the idea is stale, regardless of unrealized pain or pride. Together, price and time stop me from converting a behavioral method into a biographical problem. Because strength often travels in packs, I tie the lesson to correlation reality. I count exposure by character, theme, or factor, not by tickers with different tickers but the same song. Total open risk per factor is capped, for me, less than 3R. When the index shoves or factor coupling tightens, I reduce the basket in one decision even if my favorite chart still behaves because waves, not raindrops, sink boats. This is how I avoid mistaking a group's weather for my stock's genius. Finally, I protect the operator that must run all of this tomorrow. A broker-enforced -2R day fuse refuses new orders the moment my cognition is likely to tilt toward redemption rather than information. I also separate process scoring from P&L, so a sloppy green can't launder bad habits, and a clean red can still count as progress. When I read the journal at night, I tally sequences kept, time stops honored, ads paid, factor caps respected. Those are the deposits that purchase the only edge that compounds, permission to sit tight when strength is real. This is Livermore's breakthrough reduced to verbs I can obey, reclaim and hold, to sponsored pullback, to participation, to scout, to paid ads, to exits at price and time, to basket control. Nothing mystical, just behaviors the crowd struggles to simulate for long, organized so my best actions are the path of least resistance. If you could hardwire only one part of this lesson tomorrow, paid ads, time stops, or factor basket control, which would erase the most mistakes for you? Tell me below, and I'll distill it into a one-line rule you can pin above your charts.
Carrying Livermore's lesson from Section 7 straight onto a modern desk means I stop relying on grit and start relying on defaults. I want the platform to express proof before conviction for me, so my best behavior happens automatically and my worst behavior requires effort. Before the bell, I open a tiny control panel that translates the ocean into permissions. Index breadth versus its 20-day, realized ATR versus its 20-day, leadership persistence across my liquid universe, and a factor coupling score. One click tags the day forgiving, neutral, or ruthless, and that single adjective pushes settings to my broker. Attempt cap 5/4/3, base risk 1.0R/0.75R/0.5R, and the height of the confirmation bar +0, +1, +2. If I can't tag it, I default to ruthless. This keeps me from letting one beautiful chart overrule an ugly sea. Order architecture turns test, pay, protect into buttons instead of promises. Every first entry is a bracketed scout, OCO. The stop is anchored at disproof, where the idea dies, not where it hurts less. The profit leg is calibrated to finance unit number 2 if the next link in the chain appears. A timer enforces the time stop so the position cannot apply for hostage status. When the clock expires without behavior, the platform flattens me. No dialog box, no debate. That single automation defangs the temptation to rename stalling as coiling. Ads become policy, not personality. The system blocks unit number 2 unless two things are true at once. The scout's unrealized pays for the extra risk, and fresh proof appears. Range shift or retest and go with sponsorship. Unit number 3 requires an independent proof, like leadership broadening across the group. If proof pauses, scaling pauses. My ambition doesn't get to run ahead of my evidence. This one rule turns aggression into something repeatable and silently bans averaging down because disproof vetoes conviction. I make participation visible on the screen so I don't have to argue with myself about feel strong. Next to price, I pin a tiny chorus box. Percent of group names above their reclaim, percent of volume on leaders versus laggards, and a rolling breadth reading for the sector ETF. When the box is thin, my read is thin. When it swells with green, the campaign has air cover. A soloist can be impressive. A choir is true strength. Correlation gets the same respect. My blotter groups positions by character, theme, beta, and sector, so 5 rhyming tickers can't impersonate diversification. I cap open factor risk equal or less than 3R and wire an alert that forces a basket trim when coupling tightens where the index shoves. I reduce exposure as one decision, even if my favorite name still looks immaculate, because waves, not raindrops, sink boats. That's how I keep a sponsored idea from turning into a portfolio-level blind spot. I divide the day into roles so drift can't sneak in. Analyst mode, pre-open, tag the regime, write setup cards, entry behavior, disproof, time window, add criteria. Operator mode, live, execute only what's written, no edits in trade. Auditor mode, post-close, 2 columns, what the tape proved versus what I assumed without proof, plus a process score beside P&L. I review parameters only after 30 fully qualified trades in a similar regime. Variance alone is not permission to tweak. Boredom doesn't get to masquerade as innovation. Readiness is measured like risk. If sleep, focus, or emotional residue score low, I pre-announce a watch-only first hour, even on forgiving days, so I don't confuse restlessness with signal. Cash becomes inventory, attention to read clearly, and capital to press when the sequence actually forms. And when I do catch real sponsorship, the hold is quiet because exits were contracted at entry, price at disproof, time at expiry, basket reduced if a wave hits. I'm not brave, I'm prepared. Everything I just described is the same sentence from Section 7 expressed through tools. Reclaim and hold, sponsored pullback, participation, scout, paid ads, exits at price and time, basket control. The crowd can fake a candle. It struggles to fake a chain. My software simply refuses to let a single tick impersonate truth. Which of these implementations would upgrade your desk tomorrow most? Regime presets, auto time stop flatten, paid ad blocking, or factor or basket caps? Tell me the one you'll actually install, and I'll give you a one-line rule to paste above your charts.
Staying faithful to the rules we built in Sections 7 and 8,
I run the same choreography every session so true strength can reveal itself without me needing to improvise. Here's the exact loop, start to close, written so my future self has to climb over process to make a mistake. Pre-open, 10 minutes. Tag and preset. I open the small control panel, breadth versus 20-day, realized ATR versus 20-day, leadership persistence, factor coupling. One-click tags forgiving, neutral, or ruthless and pushes permissions to the broker. Attempts, 543, base risk, 1R, 0.75R, 0.5R, confirmation height, +0, +1, +2. If I hesitate on the tag, I default to ruthless. This prevents one pretty chart from overruling an ugly C. Build the watch list by behavior, 2 columns only. Level, names with a clear reclaim line/pivot, and leadership, names already showing relative strength. If a name appears in both, it's priority. I flag the group ETF and 2 leaders so participation has visible reference points. Write setup cards, not from memory. For each candidate, I fill 4 blanks before any order. Entry behavior, reclaim and hold of specific level. Disproof, where the idea dies, beneath reclaimed level plus cushion or below last higher low. Time window, n minutes bars for momentum to show character. Add criteria, fresh proof only. Range shift, retest and go with sponsorship, leadership echo. If any blank can't be filled, the name goes to observation only. Opening protocol, first 90 minutes. I let the reclaim happen and hold. My first order is a bracketed scout, OCO, stop at disproof, profit leg calibrated to finance unit number 2, and a timer equal to the card's window. The scout's job is information, not validation. I say the sequence out loud as it unfolds. Hold, sponsored pullback, participation. So language can't quietly downgrade the verbs. Scaling only when paid. Unit number 2 unlocks only if 2 conditions are true at once. The scout's unrealized pays the incremental risk and fresh proof prints. Range shift or clean retest and go with sponsorship. Unit number 3 requires an independent proof. Leadership broadens, group breadth ticks, or second range shift. If proof pauses, scaling pauses. No make-back ads, no reputation ads. Control while in the move. I trail beneath structure that defines the thesis, not beneath fear. If price gives back the entire paid move, I reduce without speeches. I display a chorus widget, percent of group above their reclaim, and sector ETF breadth, so participation can't be imagined. I map open risk by character, theme, beta, sector, and cap total factor risk, less than or equal to 3R. If the index shoves or coupling tightens, I trim the basket as one decision, even if my lead name still looks immaculate, because waves, not raindrops, sink boats. Midday discipline. Silence invites narrative. The timer ends hostage trades. If 4 scans produce no qualified sequences, I schedule a watch-only block to recharge attention. Cash is inventory, not absence, reserved for the next sponsored invitation. Last hour protocol. If a runner survives, I migrate the stop under the most recent swing that defines the thesis, not the closest tick that calms nerves. I only hold overnight if structure supports the hold and factor coupling is benign. I write 1 sentence for any hold. What must remain true by morning? If the sentence needs adjectives, I flatten. Post-close audit, 10 minutes. 2 columns, what the tape proved versus what I assumed without proof. I score process, 0 to 5, beside P&L, and mark any violations. Ignored timer, narrative stop, factor breach. Parameters are reviewed only after 30 fully qualified trades in a similar regime. Variance alone is not permission to tweak. Recovery protocol, operator first. Any -2R day or any rule break triggers half size for 10 clean executions. Screens off, walk, water, breath, journal. I return only when I can run the checklist verbatim. Calm isn't a mood, it's the sound this system makes when it's obeyed. This daily loop doesn't predict where strength will appear, it makes me available to it. By insisting on reclaim and hold, sponsored pullback, participation, scout, paid ads, exits at price and time, basket control, I stop paying for apparent strength and start partnering with the kind that crowds can't fake for long. Which single step will you actually install tomorrow? Auto time stop flatten, paid ad blocking, factor/basket cap, or the 2-column audit? Tell me your pick and I'll compress it into a 1-line rule for your screen.
Carrying the daily loop from section 9 into the final minutes of the session, I don't feel the need to guess or perform. I'm simply present while the market writes its last paragraph.
The tape can still faint, the group can still breathe unevenly, the index can still shove. But the order I've rehearsed all day is the same. Reclaim and hold, sponsored pullback, participation, scout, paid ads, exits at price and time, basket control. I'm not searching for heroism in that sequence. I'm searching for sponsorship, the kind of strength a crowd can't fake for long. When it appears, size is funded by progress, not by my appetite. When it withholds, I'm flat by contract, price or time told me so, and I leave the desk solvent in capital and attention, which are the only two currencies that compound. This is where Livermore's lesson finally becomes more than a quote. He never asked the market to be easy. He asked himself to be ordered. He called the direction of least resistance not to predict, but to orient. That orientation is what lets me sit tight without burning through resolve. Because sitting tight is no longer a stunt. It's the downstream effect of being hired by proof. And when proof pauses, so do I. No speeches, no rescue missions, no one more tick exceptions. The choreography ends arguments before they start. There's a quiet checklist I hear in my head as I shut the screens. Did I tag the ocean honestly, or did I promote my mood to forecast? Did I require a hold at the level, or did I let a whisper above the line impersonate a reclaim? Did I demand sponsorship at location, or did I let distance rewrite the story? Did I verify participation with a choir, or did I accept a soloist because it sang the tune I wanted? Did I add only when paid, or did I try to buy back the right to be right? Did exits live where the idea dies and when the window closes, or did I let comfort set the coordinates? And when the wave, not a raindrop, hit the surface, did I reduce the basket as one decision? Any no on that list is a note for tomorrow. Any yes is a small deposit in the account that matters most. My ability to return to the method even after a loud day. What I once called spotting true strength before the crowd has changed shape. It isn't clairvoyance, it's choreography. The crowd can fake a candle, it struggles to fake a chain. The crowd can chant a narrative, it struggles to sponsor a pullback precisely where it should. The crowd can cheer a breakout, it struggles to move the group in tune for hours. That mismatch is my entire edge. It gives me permission to be small until the market makes me big, and to be small again when it withdraws that permission. That rhythm is how careers, not trades, get built. So I mark the regime I actually traded, not the one I wanted. I write the two columns one last time, what the tape proved versus what I assumed without proof. I score process beside P&L, so good behavior doesn't disappear under lucky green, and clean red still counts as progress. Then I copy a single sentence at the top of tomorrow's card, the sentence that has outlived every indicator I've ever loved. Proof before conviction. Screens off while that is still true. The market will open with a new cast of characters in the morning. I'll arrive with the same script, patient with entries, strict with exits, and ready to let true strength reveal itself the only way it ever has, in behavior, on time, with sponsors. What one line are you taping above your charts this week? Hold or it isn't proof? Paid ads only? Exit at time? Or trim the basket on the wave? Drop your line below and I'll tighten it into a screen-ready rule for you.